In this video, I want to talk about how I'm trading or profiting from the Bitcoin cycle. Now, just to preface, you can lose a lot of money in investing or trading Bitcoin, so nothing in this video is financial advice or intended to be a how-to. This is just how I'm approaching the market. Any trades or investments anybody does needs to be based on their own research and their own decision making. With that said, looking at the trends in the Bitcoin cycles from year to year, there can be potentially a lot of advantages gained for a trader to allow them to gain higher profits than they otherwise would be able to if they just held in the market. And so looking at the chart, we can see each of the previous cycles and the cycle that we're currently in. Now, for those who are not familiar with the Bitcoin cycle, just to quickly give some background for that, the Bitcoin cycle is centered around the Bitcoin halving, which occurs roughly every 4 years. Now, new Bitcoin are introduced into the market through the Bitcoin mining process, and a certain amount of rewards are given out in Bitcoin every time a new block is mined. And so the amount that's given is cut in half every 4 years, so every cycle. And so, for example, we can see that the halving that occurred in 2012 reduced the number of Bitcoin that's given out to 25. Then the second halving reduced it to 12.5. The third halving reduced it to 6.25. And then the most recent halving reduced the number of Bitcoin given out to 3.125. So every time the amount is being reduced, and that reduction causes a supply shock in the market, which then, with demand increasing or remaining the same, that reduced supply means that the price has to go up, or typically does go up. And so based on that cycle, we see some key components that every single cycle has. So again, we've got the first halving here, that's delineated by this black line. And so every cycle has 4 key components. The first component is a 3-year bull market. So we can see here, this is the bull market where the price is increasing, and that lasted 3 years. We can see the same thing for Q4 2017, roughly 3-year bull market. So the first component is the bull market. The second component is the top, which occurs in Q4 of the post-halving year. The next component is a 1-year bear market that starts after the top. And then 1 year after that, you get the bottom of the price, which again occurs 1 year after the top. So looking at each cycle, we can see here, this is the second cycle. You've got a 3-year bull market, 1-year bear market. You've got the top in Q4 of the post-halving year, and then the bottom 1 year later. Again, third halving, we've got 3-year bull market, 1-year bear market. We have the top in Q4 of the post-halving year, and then the bottom 1 year later. So we don't have a large sample size here to work with, but what we know is that in each cycle, the same trend has continued. And so using this model, it can be advantageous, or I believe it will be for myself, to make some decisions based on what this model is showing. So in the current cycle we're in, if the model continues to be true, then I estimate that the top price will be roughly 218,000 USD. Now, of course, the price could be higher than that, it could be lower than that, but this is the base case to have as a rough estimate. And so, knowing this, it's more easy to predict what the potential gain could be, potential returns and potential profits. So this will likely occur, based on the model, in Q4 of 2025, and then 1 year later, in Q4 of 2026, is when the model indicates that the bottom of the price will be. So a trader can look at this and potentially take advantage of this by, of course, selling here in this sell zone in Q4 of 2025 with the intention of rebuying in Q4 of 2026, with the idea of buying in either a couple months before and after in order to gain an average price during that period, because of course the bottom could be a little bit earlier, it could be a little bit later, and of course it could be really at any point whatsoever. So it's good to kind of make estimates and average into the market to ensure that that bottom or that top isn't missed. But of course all models can be incorrect, but it's useful to have a base case as a starting point and just to have an idea of what's happening. So again, this isn't financial advice at all, but I enjoy sharing these types of charts. If you found it useful, feel free to give the video a like and subscribe for more analysis on Bitcoin and other investment assets. And thanks for watching.